Okay, first topic, interest rates. Finally, the Bank of Canada I almost said does something sensible and only increase 0.25%. I guess I've just become accustomed to these like 0.75 and 1% jump. So I'm thinking 0.25% is great now. Oh boy. But anyways, Patrick, the market, I think by most consensus called a 0.25. You called a 0.25. I was hoping for a 1% decrease in interest rates only because I'm a contrarian. I got a bunch of mortgages coming up for renewal. What are your thoughts on the Bank of Canada's take only increasing 0.25%? What does it say to the market?
Well, I think it was sensible for them to do it. And as Tiff pointed out in his narrative afterwards in the press conference, he answered some questions, but he really said, we're going to take a pause. He really set it up to give people confidence that, moving forward, they're going to be paying attention. They're not going to be necessarily arbitrarily raising rates. They're right now looking at pause. They're going to watch the market. They're going to watch the indicators before they, raise rates again and before they consider it. So it was more of a responsible way to present it. As well, it showed some optimism by the Bank of Canada of what's happening economically. So what do we see going forward? Will they pause and will they continue to pause? I mean, there's some data that we're going to have to keep an eye on. We can talk about that shortly. But they're going to be looking at the data going forward and then deciding whether they're going to increase or not. Some are actually, JG, calling for an increase or a decrease by the end of this year. I know Bloomberg's one of those groups that are saying, something by the end of the year, we could actually see a decrease in interest rates. I'm not that optimistic. But having said that, I think the Bank of Canada did the responsible thing. They could have gone without the 0.25%, I believe. But let's put it this way. What they're going to do is they said, we've raised it that 0.25 point. We're going to sit and wait and watch what unfolds. Let the lag catch up. And that's what needs to happen rather than just continue to raise rates. They've already done record increases in terms of the time frame and the amount. So this was the responsible thing to do. I'm finally agreeing with Tiff. Although I still think he should have been fired a long time ago.
Your opinion hasn't changed. Here's what I'd say, Patrick, which is I'm sensing this right now in the market. I think it's very interesting they did this. I think it's a good thing they did this. Only 0.25. I would have loved for them to at least do nothing, and that would have been even better if they would have paused. I've seen a significant change in the marketplace so far this year in 2023, Patrick. I'm seeing people now accustomed to this new reality. And I find that, yes, certain industries are really feeling it. And we'll talk about that in a second. But the majority of people are like, okay, this is the reality. This is what we're dealing with. And now things are getting a little bit back to, let's call it the new normal. Hate that term because of, it was created during COVID. But the new normal is these interest rates are going to be around for a little bit and people are settling into that. Now, I'll give you an anecdotal story of how I see this happening is, I got a colleague of mine who's got a house for sale, just a house, single family, nothing crazy, in the 700s around Peterborough, relatively normal. He had more showings in last week than he's had since August. Between August and the end of the year, he had so few showings that he had more showings last week. And this has actually been increasing since the beginning of January. That's what I mean about the market. It's the same with our showings in terms of our rentals and our portfolio that we manage, Patrick, across $40 million of real estate. We see a lot of different trends. Yeah. We're seeing things getting back to somewhat normal. People are out of the panic phase. I think that's a good thing because it's going to help confidence. That's my take.
Well, yeah, I think I see those points, and I think we need to just go down a little bit deeper. Number one, mortgage brokers are saying that they've been very busy recently, but we have to look at a couple things. We're talking about Bank of Canada rate, which really affects the variable rate mortgages. What we've seen, though, is bond yields change. And so now we're seeing mortgage rates that are, just over 4%, which we've normalized now. And more importantly, people, if you listen to the mortgage brokers, what they're saying is people are now coming in for mortgages for under $1 million as opposed to over $1 million. So there's this balance that's started to happen in that regard, as some prices have come down in some regions. And of course, with the fixed rate being, under 5%, it really opens up the door for people to consider that they can afford this. And they're taking short term because they anticipate rates coming down in the future. So, those are calls that are being made. But to your point, what's happening is we're starting to see some churn in the real estate market that way.
And that's nothing but good things. Will help confidence, will help the market get back to a new version of equilibrium. As we talked, Patrick, you and I were talking this week at various dinners we had and events we were speaking at. And, the economy is a delicate equilibrium. I mean, there's ripple effects throughout the economy. And now that things are getting back to normal, things will fall back into equilibrium. And this will be nothing but good things for the market as people go forward and market. And I'm going to be curious to see what happens to the spring real estate market, because we're really we're getting close to it now. We're entering February. We're going to be in March. We're now into the spring market. We'll see what it does. I'm very curious.
Yeah. And the only thing to add to all of this is we have to remember one fundamental thing. There's a lot of moving parts in an economy. And as much as we focus on real estate, we have to look at all of the things that are impacting the real estate market, impacting our economy. And that's what we have to pay attention to. Now, that's what the Bank of Canada will be watching, and we're going to talk about those data points shortly.
Interest rates covered. I love it. This is one for the books. That was a good shot, eh?
Almost hit me.
If you're interested in learning about investing in real estate the right way, look at our Real Estate Investing in Canada program. 15 steps to successfully investing in real estate. Thousands of real estate investors have learned the right way to invest in real estate following those 15 steps. You're absolutely going to love that program. Take a look, click on the link in the description below.
I hope you've enjoyed this episode. Please like and subscribe. And if you've enjoyed this, please share it with someone that you know, because it's going to be incredibly valuable to them. Also, we'd love to hear from you, so please comment below. If you want to see more stuff like this, click here. If you want to see the entire show, click there.